Welcome to another price action training lesson. We're going to talk about how price action moves. We're going to be relying on the naked candlesticks as they are printing on the chart. I have one indicator on my chart, and that is the blue line, the 21 bar exponential moving average, but it is a supportive indicator only. And as a trader, you need to be aware of price action rules because it will help you to navigate the price chart better. And as you can see, these candles are always following a pattern, even though it doesn't look like that if you're a beginner trader. There's always a pattern, a channel present. And the first rule when it comes to price action is the trend line rule, which says after break of a channel, you're not expecting instant reversal. No, you're expecting for prices to retest the latest extreme of the current channel. So as you can see, the geometric formation allows me to identify the channel. 3 swings are confirming it. Price action moves in pairs of 2, so the 2-leg pullback played out, indicating end of the correction, and the brand new bearish momentum can start reaching the new extreme. And the same thing happened to the upside. And notice the geometric formation at the bottom, allowing me to nicely predetermine where the channel may be, and the 2-leg pullback second entry long set up the trend line, and another second entry long confirmed it alongside with the EMA. So if you have the EMA and the trend line working together, that's a good sign that the momentum will build up because you have 2 key entry points in one. The day session opened around this area, and what is the overall bias? Well, we are in a large trading range because we had a very strong downtrend followed by a very strong uptrend. So the net change is basically 0. So we are in the trading range, but the most recent bias is a little bit more bullish. Even though the channel played out with a break and a new extreme, you can see the bulls retested the new high, we still traded up, and the overwhelming current bias is more bullish. Now, after there's a break new high, according to trend line rules, I expect a market to go into a brand new cycle, which is a correction phase or possible reversal. So as you can see, we have flat EMA, a lot of sideways structure. So I am pretty much sitting on my hands because this is indecision, and I'm just going to be relying on the tight channels to help me navigate the price chart better. Okay, so we are breaking back above this trading range. So what I have to do is identify the shortened channel. But we already have a small break in new extreme. Can I go long here? Not really. It is just high low. I would prefer to get a felt second entry short trap. And notice what is happening. Small break, new extreme. So we have new low for the shortened downtrend. And now we even have new high for the shortened channel. Okay, I pretty much don't want to touch it right now because as you can see, once the EMA gets really flat and you just are swinging up and down, it's a lot of indecision, and a high probability setup really has no conflicting variables. You need to have the context down right, the pattern and the key entry point. So you don't have to rush things. The market just opened and there's plenty of time in the day for the setup to appear. Okay, now we have potentially felt second entry short, but notice what is happening. Analyze the structure of this trading range. We can see that we have high, lower high, and another lower high. So once I see each new high being lower and lower, this is telling me there may be a potential bearish imbalance. And also the support is not really that static as well. So this is really all over the place. This is still the correction phase when it comes to market cycle. So I'm not going to be forcing it. It is not clear. We have a break new high, but EMA is in the middle of these bars. We have lower highs and high lows. So we have basically a wedge formation. You can see this is a wedge, which means you don't want to be touching the market right now. Anything can happen. And prices are finally breaking to the upside. So as I'm watching this, this is confirming more the bullish bias I predetermined earlier. So I'm hoping for high probability setup on the way up, but we already reached the resistance of this trading range. So we managed to go from the very failed breakout, which according to trading range rules, most breakouts of trading ranges will fail. But you don't necessarily want to be selling because you traded up into this trading range. So chances are high that we're going to continue working higher because you traded up into this trading range. Break, new extreme for the uptrend. And market is correcting to the EMA. Okay, and now we have second entry long. At this point, since we managed to go all the way from the bottom to the top without a single confirmation of the EMA, we created a new extreme, and only then we confirmed. We have a second entry long, which tells you that we're most likely going to continue working higher, but I cannot go long just yet because I would be buying directly into these highs. and I don't have a clear strong uptrend where I could force buying this high. So I cannot go long to these highs. I just need to be patient. At the same time, I cannot really sell. I'm above EMA, so strong bullish push up. And notice prices are breaking to the upside. I cannot fade the breakout. Remember, we traded up into the string range. So we're going sideways. Okay, I'm going to redraw the downtrend. We have a break, attempt to create new extreme. What am I expecting at this point? We have a new low, first entry short, pull back, second entry short. Now, this is where I'm going to zoom back and I'm going to talk about more about the structure. Notice the uptrend to the left. This was a strong uptrend, one clear leg, break at a new extreme. And now we can see that the prices are sideways, but we still keep creating higher highs and higher lows. And this is important. This was basically, this big bullish bar is what gave me the clue that we have a strong bullish imbalance and we have a weak uptrend, because notice each new major low is still higher than the previous one. And for the most part, each new major high is higher than the previous one. So you can see the prices keep trending to the upside, and it's hard for you to find a static resistance because you keep pushing higher, you keep pushing higher. And every single time you're struggling to identify the resistance or the static support, it's probably a good sign that the market is a little bit more bullish instead of a trend range. And now I switched over to 10,000 tick chart because one of the time frames that you can take advantage of is the higher time frame 10,000 tick chart, which can help you make sense of the price action a little bit better. You can see the downtrend working lower with the break new extreme, two-legged pullback, new low was formed. And when you're going to take a look at 10,000 tick chart, you can see that the structure is not resembling a trend range much. In fact, it's much more bullish. We have a strong spike and EMA keeps rejecting every single time. So if you're going to take a look at 10,000 tick chart and combine it with the fact that we have bullish imbalance on 2,000 tick chart, which is a smaller chart, it helps you put things into perspective that the bias is a little bit more bullish and I'm not necessarily focusing on selling too much. And by the way, notice we still have the two-legged pullback even on 10,000 tick chart and another two-legged pullback right here because market moves in pairs of twos, and a key entry point, the high probability setup will form. So once I realize this is a weak uptrend, which means weak uptrend has a lot of two-sided trading, the bearish pullbacks are strong, I was looking for potential channel. Now the trend range is still valid, so you don't necessarily want to be looking for really wide channels, but it can help you to make sense of the bullish imbalance. So I'm looking for failed second entry short above the EMA, but I can't get it, and market created new extreme. We have first leg down, I'm just gonna copy it, pull back, second leg down. Notice almost measured, larger two-legged pullback. We have a new low where I'm gonna reset the count. We actually don't have a trigger even here. And notice we just don't even get a high low, nor the failed second entry short. Because after the two-legged pullback, this is where the bullish imbalance will kick in, and you're expecting for prices to form a high probability setup. And notice prices just keep trending to the upside without a decent setup. This is very common when it comes to trading a weak uptrend, because I'm just gonna quickly draw the channel. Because when you're trading weak uptrend, you don't want to be buying too late after the push phase has played out. You want to be focusing on letting the correction play out and try to buy failed second entry short low when the push phase will begin. But as you can see, it didn't really offer us a good setup. So prices are correcting. I'm just going to redraw the channel. Okay, prices had a break and attempted to create new extreme. In fact, we are one tick away from creating the new extreme. We have micro double bottom. So the downtrend working lower, break almost new extreme, and notice the big bullish bar. Counting from this low, this is a first entry short, pullback, second entry short failure. And a more advanced trader can consider going long here, because if you combine it with the double bottom, strong tier 1 signal bar, it is a failed second entry short, big bullish bar. We established the weak uptrend and the downtrend played out with a break and attempt to create new extreme, and market keeps working higher. So this is where you want to buy. You want to buy low, and notice the fact the downtrend created a first leg down, if I'm going to measure it, but the second leg down was much shorter. We didn't manage to reach the measured move, and we had a very strong bullish spike. So at this point, this was the clue where price action told me that the market bullish momentum is picking up. And I have new high, first entry long, pullback, second entry long. Downtrend played out with the break in new extreme. We have the first leg down, correction, second leg down. So the two-legged pullback played out. And this is a second entry long at the EMA. Now the signal bar on my chart, and I even reloaded my data, looks better. When I was watching this live, I had even more of a bearish bar, but I noticed a lot of traders had a very nice almost bar like this, tier 1 bullish signal bar. So if you have such a nice bar like that, the price action went sideways, created a clear break to new extreme and two legs down, and EMA kept holding. So with bar like this, I know that a lot of traders had bar like this, you definitely can go long because it's a nice second entry long. And if you're going to zoom back, you can definitely see that we have a weak uptrend and series of higher highs and higher lows. So market keeps trading to the upside, and you don't want to be chasing the market. The goal of a price action trade is to buy low. You just have to watch price action go. You can trail the runner and try to get as much as you can of your position. Okay, new high, first entry long. We have a second entry long, but it's below EMA. It's not the key entry point. I cannot take this. If I'm going to go long, EMA needs to be holding prices here. That didn't happen. Okay, high low has no trigger, but I would prefer failed second entry short because notice, remember, in weak uptrend, the bearish correction may be stronger. The two-sided trading may be stronger. And this was quite an exhaustion up. So we definitely can have stronger bearish correction. Okay, I have a new low, push above EMA, and I have high low. Can I take high low? I cannot, because notice EMA flatten, we have a small congestion. This is area of indecision, no trade zone, and it would feel like we are buying the breakout. There is no bearish pullback, there is no breakout pullback. So if you go long here on a high low, your idea is not wrong, but you would be buying the breakout. The better thing here to expect is a failed second entry short. It's always the safer and the more ultimate trap, especially if the trend is a little bit sketchy like this. And I have new low, first entry short, pullback, second entry short failure. But notice how it formed. On my chart, it is just closing too high up. It's stim at the top. You know, you'll be buying at the very top of the move. Had it been smaller, half its size, is a great failed second entry short because the downtrend played out. Even if you extend the channel a little bit from this new one, you have a break new low. And the push above EMA is confirming that the downtrend had truly a break new low and there are no more bears in the market. Push above EMA, high low, first entry short, pullback, second attempt to sell. You can be more aggressive, but you definitely need to have better signal bar. But it's great to study this when it comes to price action because next time you will have better signal bar and look at it go because it's a breakout pullback of the congestion. So the small resistance is acting as a support and the EMA keeps holding. Okay, we have a second entry long. Can I take it? I cannot because I have nice geometric formation of the highs allowing me to redraw the downtrend. I need to always draw these trend lines because the correction phase is present in the market and only after there's a break and a new extreme I can consider selling. Okay, we have break new low, but prices keep trending to the downside strongly. I don't want to buy blindly because there's a very strong downtrend and I can even widen the channel because we are trading so consistently to the downside. I would need to see push above EMA for me to even consider going long. And that's not happening and prices are completely reversing. Okay, so I'm going to zoom back. At this point, I was a little bit confused because if you're going to notice, I have the resistance here, the support, and a lot of times it's very common when a flat channel like this in trading ranges, the trading range structure will overwhelm the market and it may not get a new extreme. So when I was watching this, I was leaning more bearish. However, as you can see, we had overshoot, which overshoot can generate strong momentum in opposite direction, which means I have to skip the next second entry short. Normally you'd be interested in second entry short, first entry short, second entry short, first leg up, pull back, second leg up, but I have confirmed trend line and I have overshoot. You can see how the bottom fell off and you're so far from EMA helps you identify that you have overshoot. So what you're expecting, a lower high confirmation setup, but it never formed and prices kept pushing above the EMA. At this point, you may still be thinking bearish because this is a strong downtrend. It may retest the new low. Okay, but once you see this, at this point, you have to switch the gears. This was the last chance because you have two-legged pullback, third leg up, and if prices are going to reverse bearish, EMA is not supposed to hold. The fact that you have smaller support and you keep pushing higher, this is where you have to adapt and the bias change. And once you see this, this makes you think that finally this spike in a channel may get new extreme, and you can use once again 10,000 tick chart to help you work with the price action a little bit better. So this was a strong sell-off, overshoot, leads to a break of a channel or possibly reversal. And this time the reversal would be actually with the direction of the main trend, which gives you a little bit more clue that you may truly go higher. So we expect new high for this main channel. I'm going to redraw now why the channel, because the overshoot is reversing the market to the upside. And I have first entry long because I have micro double top, which resets the count. Now, if you have legitimate second entry long here, this is a good setup because you have EMA with the trend line. And at this point, you're already aware that you're going to reverse and you're going to go higher. So on your chart, if you have legitimate second entry long, and I noticed a couple of traders had, I have micro double top. This is okay setup to take a chance because once you have two key entry points, that adds more confidence and you're most likely going to continue working high. Remember, the big channel needs new high. Okay, you're overshooting quite strongly, but you're not coming back and you keep pushing higher. Okay, so let me see if I can get even steeper channel. But even this channel has overshoot. So no matter how much I adjust my channel, it is just too steep. And just like we had overshoot here, notice this big bullish bar at the top of the move indicating depletion, and you're so far from EMA. This is very common, and a lot of times a good clue that you have overshoot, big bar, trend bar at the top of the move where you're probably thinking that you may have overshoot. So you definitely want to be careful and always err on the side of caution. You're never too safe taking into consideration overshoot. Okay, prices created new high. We're correcting. I have a first entry long, second entry long, horrible bar, but can I take second entry long? I cannot. Even with good bar, because I just had overshoot of this trend channel line. And just like here, we may create a brand new strong momentum. Here, we may create a stronger correction. And you can see this is exactly what happened. Market is correcting. At this point, what are you thinking about? You're thinking about market creating new extreme for the main uptrend and even for the shorter term one, for this tighter one. So two channels need to get new extreme. And the sign that you can go long basically is only after you get a push above EMA and some nice high probability setup. So as long as you see prices continue working lower, you never know how strong the correction is going to be after overshoot. So it's really crucial for you not to be buying too low. Remember, high probability setup is not a gamble setup just because you think something's going to happen. No, it needs to align with multiple rules. So, okay, price action keeps reversing down. I can try to look for some visual aspect of two-legged pullback. Okay, this looks pretty good. This makes sense. Okay, this is good. I'm going to redraw the uptrend. Can we get a failed second entry short? New low, first entry short. Pullback, second entry short failure, but you're so far away from EMA, you're too high up. There is not even a trigger, but even if there was a trigger here, you cannot go long. You need to pull back closer to EMA and have a little bit of room before these highs. I was attempting to pull the trigger on second entry long. There was no trigger and a massive sell. So you can see you always have to wait for the trigger for the break above. There is no second entry long here because there was no break higher above this bar. Only if there's a tick above this bar, the second entry long would trigger. So never be too hasty. Never force your will on the market and think, okay, I'm going to sneak a little bit early, because a lot of times that happens. You may think you're going to sneak a little bit early. The setup is really not there. And all you end up is just having a losing trade that will affect you throughout the rest of the session. So it's always better to be safe and even miss a setup than to make a stupid mistake like this when you just jump the gun too quickly, because there is no setup anyway. So just ended up having losing trade for no reason. It's always better to have, if you're going to have losing trade, to at least follow the rules so you don't have to be that mad. Micro double bottom, new low. Has anything changed based on the structure? Not really. We can still see that each new major low is higher. Structure is clearly bullish. We cannot even make it to the midline. And every single time prices keep offering more price action, we can see that each new low is higher and then higher. So there is a clear bullish uptrend and it needs new high, and even this channel needs new high. So only thing I'm focusing on is failed second entry short above EMA. You can see no failed second entry short, market just reversed. Okay, I have a first entry long, pull back, second entry long. Can I go long? No. EMA didn't hold. Had the EMA held here, could have went long here, but not like this when EMA was broken and it formed below the EMA on the opposite side. EMA needs to hold here. High, low, no trigger above, so nothing. You have a first entry long, second entry long, but you're a little bit too stacked, a little bit too congested. Even though it worked for a scalp, you don't really want to push it. It's getting a little bit cluttered, but notice the support is holding here, EMA flattening, so the bearish momentum is definitely depleting. Big move above EMA, big move above EMA, so it's just only a matter of time before the bulls will finally make it. The correction is just a little bit stronger. You have somewhat of a micro fell breakout, which I can mark more aggressive because the signal bar is so strong here. You take one tick lower, trapping all the sellers who are trading the momentum. Look at this nice big bearish bar. They're selling directly into this bottom while the market context is telling us we're going to reach new high. Great bullish bar. The support is clearly proven. No wider channel. You don't be drawing a wider channel like this because it's against the main bias. Okay. New low, first entry short, pullback, second entry short, failure. And we have a failed second entry short, great tier 1 signal bar. It is more aggressive because you're not perfectly close enough to EMA. But after this massive support bounce and the fact that all uptrends still need to get new extreme, this was the setup where I actually took a chance here. And it's definitely more aggressive, but all the contexts align. It's just only a matter of time before you're finally going to break higher, especially with the support forming here. You can see how the bearish momentum is so weak. It's just pushing lower and not really breaking it. It's building up here, the failed breakout and the failed second entry short. Okay, market is pushing higher, can get a second entry long, and you cannot notice prices created almost the new extreme of this one and almost of the main one. We can see the difference between a strong trend to the downside and to the upside and the weak trend, because the weak trend has a lot of two-sided trading. It's a trading range where you're struggling to identify the key levels, but you can't deny the fact that you have bullish imbalance present. This bullish imbalance was so strong and we had so many bars that there actually ended up being a channel because the volatility was really big today. So there ended up being a lot of bars. Normally the trading range is a little bit smaller. You're definitely hesitant to making the channel wider, but even if you're sticking just to bullish imbalance, you cannot go wrong. The main thing is to let the bearish correction play out and try to take some nice failed second entry short at the lows. This is a little bit confusing because the bearish structure was too strong, but this was oversold, overshoot. You're respecting the overshoot, and after you see EMA rejecting every single time here, you have to switch the gears and adapt that we're truly going to create new high. And basically you're doing the same thing. You're just following the main context, following the patterns, and if someone tells you that the trend lines are subjective, you can see that every single time, clear downtrend working low, break new low, clear proven uptrend, break new high. You cannot deny the fact that the prices are trying to create new high for this channel and even new high for this channel. There's a clear, distinct bullish bias. You're just letting the bearish correction play out. The momentum will build up. The sellers will get trapped selling directly late where the correction phase is ending, and the market will reach the new extreme according to trendline rules. So I'm going to wrap it up. Good luck with your trading.